Good day, learners. Okay, so now we are doing question number 2, the general journal and the ledger accounts. Now, I want you guys to not forget what we have learned in the first question. We're going to apply those steps that we did in the last question in order for us to do the general journal. So, this is the question. Right, and this is the answer sheet. Okay, so what I've picked up is that they don't ask. Usually, general journal is structured in this way. You start off with the account that is debited, then you write the account that is credited slightly away from the margin, and then you do not need to write a description for that, because remember, this is now journal. You need to have the journal voucher as the document number, and then under details you have account debit next to the margin and account credit away from the margin, and then you have the description under your details column. But here you are only required to have account debit and account credit. Right. So what I like to tell my grade 8 is that the first two debits and credits are for the double entry, right? The first two are for the double entry, so I'll just write here. Right. Those are the first two columns are for the double entry. Now, what is different with the other one is that they told you account debit, account credit. You remember that format? Right? Remember that format. They said account debit, account credit, and then they said accounting equation. In this case, they're just telling you debit and credit. Do you understand? So it's still account debit, it is still account credit, right? So here, you need to write the account that is debited first, then you write the amount, and the account credited second, and then you write the amount, right? So I'll just show you an example. This is an example. Let's say they asked us the first transaction, right? Similar to the one that we have done here, the one for stationery, right? Our account debited here was stationery, so I'll have stationery as my first account, and the amount of 650. Here you do not need to write the negative sign, you just write the amount. And the account credit was the bank, and then so here's my bank, right? Since it's credited this account, which is bank, since it's credited, I'm not going to write it here. I need to write it where it says CR, and I have 650. Can you see it's still the same concept but a different table? Do you understand? So given that my two accounts never affected debtors control, I will not put any entry here. And then since the transaction never mentioned creditors control or people that we owe, I'll not make an entry anywhere there. So it will stay blank. So this is what needed to be done. That's all. Do you understand? So why do I say it's a double entry column? It's because it adheres to that concept of saying if I have debited the first account, the second account needs to be credited. Do you understand? So I cannot have 650 here and 650 here. It won't make sense. Right? I hope you guys got it, and it's deeply embedded in your brains, guys, that you do not make this mistake ever again. So remember, we needed to do the T account. So I'm assuming that you still remember the T account associated with this transaction and what this transaction was. So I'm just going to simply erase this away from here, and then we do transactions that require us to do the general journal. Right. So I'm erasing my eraser here. It's a lovely eraser that I have. It removes the pen from the paper. Okay, so let's see how many marks. 30 marks. This is simple 30 marks you can acquire, people. Right? Some say yes sir, you say it's simple, but we do not find it simple. When I say it's simple, it is simple. I'm not joking. So you guys are joking around when you say it's not simple. I hope after this it will be simple for you guys too. I really want these marks to be acquired by you guys. Just looking for paper in order to do my calculations. Okay, all my papers. Right, you know how I like to do it. So again, this is a table. You do not need to have calculations on it. Okay? You won't lose marks if you do not show the calculations. All they want to see is the final answers. Correct? Yeah, I believe so, yeah. But on the side, you need to write the calculations. Okay. Alright, my greetings. Let's start with the first transaction. Okay, so it says here, we need to read the background story first. We can't just simply go and attempt the question. It won't make sense. It says, Mpumelelo traders, this is us. We are the business, so we are Mpumelelo traders. It says the information provided was taken from the accounting records of Mpumelelo traders on the 28th of Feb 2025. The business uses a 100% markup on cost. Remember, guys, so this is important each and every time. The date and these additional information tells us that markup is 100% on cost. Okay, so we are required to record the transaction in the general journal for Feb 2025 and close off the journal properly. So we are given information. Information 8 tells us the total. Right, so we are in the month of Feb and we have a total at the beginning of the month, right? From the general journal. On our debtors control, we see that we have a total of the debit for 700, total for credit for 320. Under creditors control, we have a debit of 500 and a credit of 770. Right, and then these are the transactions on the 28th of Feb 2025. Okay, so these are the transactions that will help me to record the necessary accounts that are here. So we see here, these are the totals that appeared on the debtors control. Yes, there's the 700, 320, the 500, and the 170. Right? We are just confirming that it is the totals. Right. So we are doing the month of Feb at the end of the month. So which means these transactions were, how can I say, they didn't appear, or they didn't, yes, they didn't appear during the month, or they appeared during the month, but it's those transactions that it required a special attention. So the journal is that transaction that is that journal that you record like transactions that are very unique, right? It's not like where you have cash sales, where you bought with cash, that's CPJ, CRJ, and your credit sales, that's DJ, and the opposite of DJ is DAJ, and creditors journal where you bought on credit, and the opposite of that is DAJ. So these are the special ones where you find that a transaction you cannot really put it under cash. Do you understand? You cannot say that you bought something for cash, but it just, you will see when we get closer into detail with these transactions. So the first one says windows and ceilings to the value of 15,000 were repaired, and this was incorrectly recorded as land and building. Right? And I said to you guys that the information is there. We just have to decode it in a manner where we when we write it, it makes sense and our equation balances at the end. Ne? Okay, so what I'm picking up from this is that windows and ceilings, I believe this windows and ceilings to the value of were repaid. So we suffered an expense which is called repairs, where we had to repair the windows and ceilings. So windows and ceilings to the amount of 15,000 were repaid. So this is my expense. Remember, repaired is an expense, and this was incorrectly recorded as land and buildings. So why was it recorded under land and buildings? Is maybe because the accountant or whoever was doing the books during the month took it and put it under land and buildings. But we know that we cannot add that under land and building because it was an expense. Probably the ceiling was now old, it needed refurbishment, like maybe new paint or new style, and the windows probably they took out the old ones and put the aluminum windows to make the building look nice. But that doesn't add value to the land and building. That actually is a cost that you suffer because when you sell the premises or whatever, they do not say, oh, you put ceiling, you put new fresh windows there. No, they'll just value it based on the area that is on and the current market price of that place when you're selling it. So it doesn't add on the cost. It doesn't mean that since you repaid, then you can add on the value of the land and buildings. So here's what happened. Right? So they're telling us that this is what they did that was wrong. So you need to first have the land and buildings account. So the land and building account is an asset. Remember, we have non-current assets and current assets, but everything is classified under asset. So land and building is a non-current asset, but it's also an asset. So here's my asset that I'm seeing here. And now they're telling me that we have actually was where repaired, and this was incorrectly recorded as land and buildings. So if something is incorrectly recorded, it would be recorded on the plus side of that particular account, not on the negative side, on the plus side. So they have made this entry here, but they were not supposed to have made this entry. So now what they were supposed to have recorded was repairs. This is what they're supposed to record, but they never recorded this, and this is an expense. So this amount was supposed to come here, not here. So how do we move that particular amount to where it belongs? Right? So we need to cancel it out from here. Can you see on this side we have a positive side, and this side we have a negative side. So for me to cancel this amount, I need to put it on the opposite side so it cancels each other out. So if I have a positive 15,000 and a negative 15,000, it means in that account the 15,000 doesn't exist anymore. So it's as simple as me not saying that I didn't record that. But now here's the twist now. As soon as you make an entry that side, just to cancel that one, you have now made a credit entry, and now you need to adhere to the double principle. For where you make a credit entry, you need to make a debit entry. So which is why we have that debit under repairs of 15,000. So this was the correct thing that we needed to do in the first place. But now, since the accountant did it wrong there, so we have corrected by crediting land and building, and then that credit there, right, had to have a corresponding debit entry, and a debit entry is for repairs because that's the account that that money was supposed to go to. Right. Okay. So now let's record this um, in our answer book. So which account was credited? Which account was debited? Remember, general says we must start with the account that was debited. The account that was debited was repairs. I'm not talking about what they've done incorrectly. I'm talking about we have seen their mistake. This is their mistake. So I like to put it when I make my notes. So this is the incorrect entry, and then this is the correct entry. But when I made this entry, I made a credit, and then of which has to have a corresponding debit entry. So I've debited repairs, how much? The 15,000. And then I've credited what? Land, and it becomes tricky now. Building becomes tricky because there's no space. But I can as long as the examiner can see how you wrote it, then it will be simple for them to see that, okay, this is for these two go along together. So this I've written on debit side. Remember, I told you this is the account debit, and then this is the account credit. Now, my debtors and creditors were not affected in this transaction. It never mentioned me never mentioned us getting money from our debtors, and then it never mentioned us paying our creditors. So in this transaction, we are done. We have answered what needed to be answered. Right, let's go to the second one. It says goods purchased by L Lo a data. Great. Now we don't waste time. We know the first account is debtors control. Debtors control is an asset. Increases on the debit side, decreases on the credit side. There we have. Let's find out what happened with this guy. It says, as per the invoice of 480 was incorrectly posted to the account of L. Leroy, a data. Can you see? So who purchased? The person who purchased was L. as per the invoice. But this was incorrectly posted to L. Leroy. So meaning the accountant made a mistake because the initials and the surnames start with L, both of them. Right? So these are two debtors. Okay? So I'll have Low here, and I'll have Leroy here, who is also a what? A debtor. So they are talking about two individuals that are debtor to the business. So now, if this guy finds out that we said that he took an amount, he took stock from us for 400, he wouldn't be happy because he's not the rightful person of that stock. The person that took the stock was L. So we must increase his debtors control here. So we will start with the incorrect entry. The incorrect entry was incorrectly posted to L. So incorrectly posted, go to the plus side. 480. There we have it. Incorrectly posted. You understand? This is the incorrect entry. Right? Now how do we correct it? We put it on the opposite side. Why? Because we want to cancel that positive with what? With a negative. And at the end, I'll have nothing here on this account, on this guy's account. So this guy will be happy now that he now knows that the invoice or the stock that was taken by someone else is not put under his name. It has been now cancelled. by us making a what? A credit. So when we make a credit, we make an entry. Do you understand? So for every credit entry, there must be a debit entry. So there we are. There's my debit entry. Can you see, boys and girls? So both are what? Are debtors. But who is debited? L and who is credited? L Leroy. Okay, so we go to our what? To our answer sheet. Here's my answer sheet. I'll start with who? Who is debited? L Low. Who is a what? Debtor. Alright, small now. And who is credited? L Leroy. Who is also what? A debtor. The first one I have debited with the amount of 480. The second one I've credited with the amount of 480. Both are what? Are debited. But the first one, what happened? So learners, here you need to pay close attention. Both are debtors. Here's my debtors control. Do you understand? So although I've debited 480, when I come to the debtors control, I just simply transfer the amount there under debit side for the debtors control. And then under Al Leroy, since he's also a debtor, I will also put the 480 there. Right. That's it, boys and girls. That's it. You do not have to do anything else. You do not have to come to the creditors control. You are done. Do you understand? So, for me to explain it again or in a different manner, this is the alternative explanation that I'm giving you. Right? So, L a debtor, was not debited, was incorrectly, was bought things, but was not debited. So we have debited him or her. Right? There's our debit. And since this guy is a debtor, I'll just simply go to the debtors control. Since this was a debit, I'll just simply write the debit there. And then the second one, L Leroy, was incorrectly debited. So we made a what? A credit entry in order to cancel out the incorrect debit. So there is the credit that I see there. Do you understand? I do not need to write that incorrect entry because that entry was done previously by the accountant. I need to record an entry that would rectify that incorrect entry. So we are not going backwards, we're going forward. You understand? So which is why you are only seeing us making a credit entry under Leroy. So there is our credit entry under Leroy. And then since this guy is a debtor, you see, there's my debtor, and I've credited this guy. So which means I need to go to the credit side of the debtors control and write the 480. It's as simple as that, boys and girls. There's nothing complicated with this. You don't need to crack your heads for this, but you just need to understand that, okay, fine, this account is a debtor, right? In the double entry, did it affect the debtor? Yes, it affected the debtor. You go to the debtor, you go to the column. Was the first account a debtor? Yes, it was a debtor. So we need to put a debit on debtors control. And then the second account, was it a debtor? Yes, it was a debtor. Was it credited? Yes, it was credited. So I simply put on the credit side. That's it. You got your marks. Simple like that, right? So I'll show you the marking allocation next time. I mean later on when we are done with the question. Okay. Now question 3. Here's a question. Okay, there's question 3. Sorry, transaction number 3. It says a creditor. Can you see a creditor? Don't waste time. When you see these keywords, you just simply go and write the account. Do you understand? Can you see oh, this is a minus. Remember, this is a liability. It's a minus on the debit side and it's a plus on the you adhere to the deadly rule still. See? So even for myself, sometimes I'm like, I write, and then you find that maybe I might not put the plus where I'm supposed to put the plus. The plus is to guide you, right? As you've seen before, if they made an incorrect entry, you first make the entry where they made it incorrectly on the plus side, and then you correct it, and then it just like magic. It happens like magic thereafter. And it says a creditor, you, um, Maleka charged Mpumelelo Traders, which is, remember, Mpumelelo Traders is us, an interest of 6% per annum for 3 months on an overdue account of 10,800. Oh, so this guy charged us because now we haven't paid an account that was due for 3 months. Okay, so what is the main activity here? The main activity is that the creditor charged me. Do you understand? He charged me interest of 6% based on this amount. Not that this amount is involved, but based on this amount. So, okay, I owe this. I know I owe that, right? So they charge me a percentage per annum for 3 months, right? So we need to put this in our calculators. So you say 10,000. Here's my calculator. 10,800 multiplied by 6% multiplied by 3 over 12. Then we find the interest of 162. So the 162 is the amount that I must record in my my T account. Right. Okay. Right. I was just looking for something, but I'll find it later on. Okay. So boys and girls, I hope you're still with me. So what would an interest do on your liability? Remember, sometimes you don't need to look at the account specifically, but look at the classification. Maybe you will understand that. What would an interest do? Would an interest decrease the amount that I owe? Remember, liability is the amount that you owe, or would it increase the amount that you owe? Right? So obviously, an interest on things that you owe would definitely increase your what? Your liability. It will not decrease. So here we've made a what? A credit entry. So in our second account, remember I also told you that in a transaction, two accounts are affected. So in the general journal, always they like to play with two accounts each and every time. Actually, it's like that, obviously, because it's a general journal. There's account debit and account credit. So it's just two accounts that are affected. So let's find out, okay, what is this account? Remember, it is interest that it is charged to the business. So you will simply say interest. So there's two interests, interest income and interest expense. In this case, you are charged. So it is interest expense. It's not interest income, but this is interest on overdue account. Do you understand? So, but you can just simply say it's an interest expense, and then it is an expense which increases on the debit side and decreases on the credit side. So you have the account that is credited, you have the account that is debited. So let's quickly go to the answer sheet. Account debited is the interest expense. And then account credit, and then you write the amount of 162, right? And then account credited is the creditors. Oh, no. Remember, we know the name of the creditor is you, Malek, but is a what? Credit. So in brackets we have creditors control. You know, that's creditors control. Now, the first one was not a creditors control, it was an expense. The second one is a creditors control, right? So it was an expense, so it doesn't affect our debtors nor our creditors. But the second one is a creditor. Can you see? So the amount will not be put anywhere under the debtors. Now we'll go to the creditors column, right? We will not put it under the debit because we didn't debit our creditors control. We credited our creditors control, right? So you simply do what was done here. You write it there. And that's it, boys and girls. We are done with the question, with the transaction. Let's go to the fifth one. 1, 2, 3, 4. Oh, the fourth one. So the fourth one says transfer a credit balance. So they already told you what balance is it. It was a credit balance from the account of MPO in the debtor's ledger. They also tell you that MPO is a debtor to his account in the creditor's ledger, right? So which means in this case, MPO is a debtor to us, but MPO is also a creditor to our business. In what sense? In a sense of MPO took things from us in credit and he said he will pay. And we went to MPO because MPO also has a business. We took things from him or her and then we'll say we will pay on a later stage. So in actual fact, when I look at it, MPO in my books on one side is a debtor and on the other side is a creditor. But now they are telling us that we must transfer a balance from the debtor's ledger to the creditor's ledger. This is simply saying that we need to have a proper standing. You know, I can't say you owe me, I owe you. You know, let's just set off what is there, right? Let's just simply say, given that you owe me more, rather, where was my train of thought? You owe me more, right? How can I put this? Right. So you owe me, so they must pay you. Do you understand? They must pay you at the end. So in this case, we owe Mpo more. So we have to pay him for his or her money. But okay, so that's the theoretical side of it. Okay, so when we come here, we'll say, okay, Mpo's debtor is a debtor. Okay, plus the minus. Right, this is important. As it, they said what? Remember, they're telling you you must transfer the credit balance. It was a credit balance of how much? 650. It's not normal for the debtors control to have a credit balance, which is why they said we must transfer it to the creditors ledger. So here's employee again, but now employee is a what? Is a liability. Do you understand? So it would make sense to have a what? Sorry? It would make sense for employee to have a credit balance instead of a debit balance. So we need to transfer it. So how we transfer it, we don't just say, since it was a credit, we'll put a credit there. No. We'll do as how we have done when we are transferring. We are simply transferring. So when we are transferring, we're going to put the same amount on the opposite side of that account. So which means here I've done what? I've made a debit entry under my debtors control of MPO. Can you see? And then the debit entry is followed by a credit entry under the creditors control. Why did I write debtors and creditors? It is because here they told us transfer a credit balance of 650 from MPO account in the debtors ledger. This is my debtors control account, of which I'm finding their credit balance of 650. I'm using the debtors ledger in order to transfer the balance. And then it says to his account in the creditors ledger. So I'm using the creditors control in order to facilitate the transfer. Do you understand? So at the later stage, the creditors ledger will not have a balance anymore under MPO, but we'll see a creditor's ledger having a balance of MPO. Do you understand? Okay, so what happens here is that there's no more balance here, but we have made the entry. Right. So remember, this is a debtor's control, this is a creditor's control, and we have what is called the debtors and creditors what list, and then the debtors ledger is the uh, individual accounts of the different people that owe you, right? You will have Mpo, you will have Loazi, you will have Williams, and so forth. Do you understand? So if they are there, you can tell that, okay, fine. During this month, Mpo took things and Mpo paid some of the things. In the debtors ledger, you have those kind of things. I believe I taught you this. And then at the end, you would have a balance there. Do you understand? So I'm just trying to show you the difference. So we are using the debtors control and the creditors control to facilitate the transfers. But the debtors control is a summary of all the people that owe you, which are on the debtors list. And then the debtors ledger individually shows that Mpo paid, Mpo took, Mpo paid, Mpo took. Do you understand? So it's like that. But they all sum up to what? To the debtors control. So also the creditors control works like that. So we have found out that we have debited debtors control, we have credited creditors control. So when we go to the answer book, we simply write the one that was debited. The one that was debited was the debtors control. So it's M info. So M info debtor. I must write debtor there. And then underneath M info also is a what? Creditor. There we go. And then here we write the amount of 650 because we have debited, and here we write the amount of 650 because we have credited. Now I'm pouring the above account is a debtor. We go debtors control. What happened to the debtors control in the first one? We have debited it. So you simply come here, you say 600. Now on the second one, Mpo now is not a debtor anymore. Mpo is a creditor. So we go under creditors control. But what did I do with this account here? I credited it. So we simply also credited the. That's it, boys and girls. You see how lovely this is. Okay, let's continue. Right. We see we are almost done now. So we are on this transaction. It says, as Luke a debtor. Again, you see we are telling us about a debtor. Just simply go right the debtor. Debtors control. Okay, and tell us that has been declared insolvent. Okay, this one is the special ones that always come up. I definitely for sure this will be there in your guys's exam, but maybe you asked in a different way, not in the same way. But okay, so as look. We have S there. The debtor is a state paid. So in most cases, you need to break down this transaction because of the nature of the transaction. So what I like to do is have, if I see this particular transaction, because it always comes up, I like to draw a table to make my life very simple. So what you need to do is that, so his estate paid 1,800, which is declared, which is a dividend of 6% in every rand he owed the business. The money received was properly recorded in the cash receipts journal and was written off. So usually, if someone pays you, obviously, you would record that in the cash receipts journal, right? And then, which means the other balance was written off, which means it was a bad debt, right? So you only received this much. The rest you took as bad debts. Right, so let's start with my table before the T account. Okay? Now my table is as simple as, I'm just trying to find a way. So you have an amount that is paid, right? Is this amount, right? Let's associate this amount that is paid with a percentage. It says his estate paid 1,800, which is a dividend of 6% in every rand he owed. So this is a dividend of 6%. So we'll just say it is 60%. We are associating amount with percentage, right? So remember, this goes to the CRJ. That is where it's recorded. It's paid. You got the money, right? And then the balance. Now the balance they told you written off, and then we said it is a bad debt. Balance written off. So whenever you see written off, it's a bad debt. So they are telling us that the balance. So what is the balance? They paid us 60% of the money that they owe. So what is the balance? The balance is 40%. You understand? This is recorded under the general journal. And then, so we need to find out the amount here. All right? So in total, so I don't know what total. The orders a total 100%, but in most of the time they like to play around. Sometimes they give you information of the total, and then you have to figure out and so forth. But we won't go there now, right? The reason why we have 40% is because they had to pay us 100%, and then they only paid us 60. So from the 100, what was left was the 40. So that's what I'm trying to show you. And then we'll use the unknown of unknown method, right? We used the amount of 1,800. The percentage of the amount that is known is 60. We're gonna use the percentage of the known amount, and we're gonna put it as our denominator. Can you see I'm using the stuff that is there? Do you understand? So what is unknown will go at the top. So the unknown figure of the percentage is the 40. Will go at the top there, and then we'll find out what is supposed to be on our bad debts. So 1,800 multiplied by 40 divided by 60, we find that is 1,200. So our bad debts, the amount that is written off, it is 1,200. Right. So can you see I have written general journal here? So this this amount needs to go to the general journal. This amount has to have a debit under the general journal and have a credit under the general journal. So I'm seeing they said to us we must write off the balance. So the first one, we have identified that we are dealing with the debtor. The second one, now I told you, when you're seeing written off, it is bad debts. So it is an expense. Do you understand? So it is an expense of how much? 1,200. Can you see? Sorry for the extra zero. So I've made a debit entry. So for every debit, there needs to be a credit entry. There is a credit entry. So let's go to our answer sheet now. So in our answer sheet, we are going to write the account that is debited is bad debt with the amount of 1,200. Can you see? Right. Now, bad debt is an expense. It's neither a debtor nor a creditor. But underneath, we see S. Luke, who is a what? A debtor. Right? We record the amount of 1,200 there. But as Luke is a debtor, we see the debtor's control there. So did we debit as Luke or did we credit as Luke? We credited as Luke. So we're going to put the amount on the credit side of the debtor's control. Simple as that. Then we are done with that transaction. We do not need to figure out to go and find the CRJ and record that amount. Because we are doing general journal, that is already recorded in our general journal, as it said there that it was properly recorded in the general journal. Let's go to the following transaction. It says the owner took stock at cost, and the selling price is 3,200. So in this case, remember that the stock wasn't sold, the stock was taken, and for personally I think maybe it was for personal use, but they didn't say that it was for personal use. But when an owner takes stock, it didn't say that it was sold, it said it was taken. So for whatever reason that the owner had, he used it for that. So we simply do what? We have our two tier accounts. What is affected here? What is affected is trading stock. But how is my trading stock affected? Affected negatively because now the guy took away things from the business. But remember, I need to record the original price that I bought this stock for in my trading stock account here. The selling price talks about the money that was received. So I don't need to record that thing. I hope you guys understand that part. So I need to find the original price. So for me to find the original price, I need to know what is the cost price. So SP, GP, this is another table that works the same for mostly everything that that is a bit tricky in accounting. So we associate amount with percentage. We have selling price. They told us that the markup is 100%, right? So let's go to markup first. Remember, GP would be 100. This is the markup. We find it from the information at the top. This is always 100%. So I know I write always after, but that's a note for you to know that this is always 100%. Now, what is my selling price? My selling price is the gross profit, this percentage at the bottom, plus your cost price, which is also 100. Now you get a percentage of 200 as the selling price. Can you see that? So now we know that, okay, fine. The selling price was 3,200 and the percentage of the selling price is 200. There we go. We are now doing the unknown over known method. So 3,200 multiplied by, we need to know the original price that we bought the stock for so we can take it out. So we'll divide with the 200. Right? And so the 3,200 multiplied by 100 divided by 200 will give you 1,600. So the stock went out at an original cost of 1,600. That was the selling price. So here I've made a credit entry. I need to make a debit entry. There we go. So but now, what is this entry? What is this account? Let's look closely. What is the account that is being said there? The account that is being spoken about. Remember, when somebody takes, that is drawings. That is drawings. So they took stock. There's drawings. It's as simple as that. So drawings is an expense, increases the side, decreases the side. Now in both accounts, we never mentioned debtors or creditors, so we do not need to worry about our debtors and creditors in this case. So we simply write the account debited is drawings with the amount of 1,600, and the account credited is trading stock with the amount of 1,200. 1,600, sorry. Yes, so you record it like that. And then we have our last transaction that we do not have lines for. But this doesn't mean that you guys cannot write this. You know what? You are not limited to the lines. People make mistakes. Understand? So you need to go and have your own lines also, right? So I'll just free-handedly so have my lines there because I can't find my ruler anywhere near, right? But I'm not encouraging this in an exam, and yeah, right? So I'm not sure if this would bother you, but if that is the case, then we'll just cancel this row. Obviously, the marker will see that they will have to mark other way out because I used up the space, or you just simply not write anything there, right? Remember, we need to have two rows, isn't it? For the one that is debited, for the one that is credited. So here's my two visible rows, and then at the end, I need to have total for debtors and creditors control the debit side and the credit side for both. There's my total side. Okay, fine. So this is the last one. Remember here they didn't require narration, so I didn't need to explain each and every narration in each and every transaction. It said you have received in this transaction 2,000 from B. Jelly. His account was previously written off as irrecoverable. So you have received. So if you have received the account that is affected, it is bank because you received the amount. Can you see? You receive the amount. So we have bank as the first account, debit and credit. It's an asset. You have received the 2,000. Oh, sorry. I thought that was a carrying it. Just carried away. Okay. Probably because we are now close to the end. And then it says from B jelly. So B jelly is a debt or is not. So it says received 2,000 from B jelly. His account was previously written off. So this guy had a story with us before. He had a story, a bad one. We previously written off his account as irrecoverable. So he owed us and he disappeared, absconded. We looked for him, couldn't find him. And then so we took him off our books and we said, no, you know what? We don't care anymore. We are tired. We cannot call and send statements and everything because now resources are being wasted on the guy that is not, his intention is not to pay. So we said, no, you know what? Let's just remove him from our books. But now, out of the goodness of his heart, he came back and said to us, no, you know what? I'd like to make amends and I'd like to pay you guys. And you know what? I don't know, maybe you made an apology or what, but he gave us the money. So now we do not have him as a debtor anymore in our books. So we cannot say we have received, we are now decreasing his debt. We have suffered an expense before, and so we were fine with it. And now he comes back, he pays us, and now we will say, okay, fine, we will receive it. We will not take it back. We will not say no, given that you are not our debtor anymore, we cannot accept. We accept the amount, and then we put it under bank, and then we have an account that is saying that if a debtor was previously written off before and has came back and is paying now his debt, we'll say it's bad debts recovered. of which is an income, is the opposite of bad debts. Do you understand? Increases this side and decreases this side. So here we have made a debit entry. Here we need to make a credit entry because of the double entry principle. So here we'll record bank. We have debited the amount of 2,000, and here underneath we record the account bad debt recovered. Now here I don't need to write. Here these two are not debtors control. Remember, yes, they said he was a previous debtor, but he's not anymore. So I don't need to write the amount. And our boys and girls, we are now close to the end. So what we need to do here now is to total my my journal. Do you understand? You get marks for this, even if you are not quite sure of where to write what, but you need to total at the end. And for you to total, you need to first take the totals at the top, which was 700 on the debit side of the debtors control. So you'll say 700 plus this 480 plus the 650 plus, or there's no other one, so it ends at 650. So there you go, 1,830. And then on the credit side, you also do that plus the 480 plus the 1,002. Here you get 2,000. And then here it's a 500 because there's nothing, but we only see the total there. On this side it was plus the 650, and then you record, there you go. That, I mean, additionally, so since you have these amounts here under the general journal, when you have a T account of the debtors control, which is in our next question, I believe. Do you understand? How is this amount posted? You will say journal debit. Do you understand? And then you put the amount of 1,820. And then this side you will say journal credit. And then you put the amount of 2,000. This is how you post these two. And also for this, you will have what? A T account of creditors control, journal debit of 500, journal credit of 982 under the creditors control. And then obviously, you know, this is from the general journal, GJ. Right, boys and girls. So that's it in our question. That it was worth 30 marks, and let's see what was given most marks here. But I believe most of the calculations were given marks.